Why a lot of the smaller treasury companies have been selling Bitcoin in the last couple of weeks. The biggest players in the space are quietly making it impossible for all of us to buy one Bitcoin. Strategy has bought over 100 days of the Bitcoin supply this month. And then today, we saw 12 more days of Bitcoin supply disappear forever as Metaplanet bought another 5,000 Bitcoin. And now this makes them the third largest Bitcoin treasury company in the world as they executed their first buy in 120 days. Are they trying to front-run Saylor's newest $42 billion buy announcement? Where are we right now? Why are they doing this now is the real question. And there is another little update on Bitcoin treasury companies. We are seeing, I don't know if I would say necessarily bad news per se, but the Bitcoin treasury hype cycle is slowly coming to an end, which is kind of bullish overall if this is where the capitulation is going to come from. Anyways, let's get into the first news story here, which is, of course, Metaplanet. Oh, sorry, guys. I'm on their Bitcoin treasury. So here's just the official announcement. Metaplanet adds another 5,075 Bitcoin to their Bitcoin treasury holdings, now bringing the total holdings to 40,177 Bitcoin. I think one of the most interesting aspects of the story is you got to remember when Metaplanet started. They weren't the first one to get on the Bitcoin treasury hype. They were probably, I don't remember exactly, maybe like 3-ish on that race, but they're doing a pretty good job of maintaining their very strong position. And as we've been covering, it does look like winner's going to take all in terms of Bitcoin treasury companies. We've been kind of having this conversation wondering how many of these Bitcoin treasury companies are actually going to survive, how many are actually going to be able to maintain their large Bitcoin positions in the face of a prolonged bear market. Well, it looks like it's consolidating towards the top here. And when you go into the Bitcoin treasury site, bitcointreasury.net, I think this is where it really starts to paint an interesting picture. But here, this is the Metaplanet portfolio. Let me go back to the first page. And you can see now, remember last week, we were covering the idea that Mara was at number 3, and now they're falling off. They sold $1 billion worth of Bitcoin to pivot from AI to Bitcoin, from Bitcoin treasury mining public company to a more AI centric play here. They were pretty solidly at number 3. Now they're sliding. They're sliding on the leaderboard here, and Metaplanet comes out strong. Now they're number 3, and they're not that far away from 21 Capital at number 2. So again, I think we are seeing a divide going to happen on this leaderboard. I think Strategy is going to very clearly be the number 1 leader on this. They're probably going to get to 1 million coins within the end of the year. Then we have 21 Capital. Jack Mullet. Oh, Nico, you want to come in already?
Yeah, I want to chime in, bro. Like we were talking about this earlier. There.
Oh, wait. Sorry. I wasn't showing this. So let me pull this out real quick.
Like here's my take on this. There's no underlying business with Metaplanet. There's no underlying business with Metaplanet.
They'd stop the hotels.
There's no underlying business. Like, what do they do? Where's the cash flow? Where's the revenue coming from? Like, that's my
hotels.
That's my great. And I think this is going to be like the full circle and the full realization this cycle. Like, ultimately, Strategy has an underlying software business behind it. Obviously, it's not as big as their current valuation justifies, but they had the first mover advantage. They managed to be able to acquire like a ridiculous amounts of Bitcoin. Metaplanet doesn't have an underlying business. Like where's the revenue coming from? Like ultimately, like that's the whole point. Right? Like, so are you just buying Metaplanet to get exposure to Bitcoin in Japan? Like, so it's essentially acting like a de facto ETF, essentially,
pretty much,
for people in Japan to get exposure to Bitcoin. And because of the tax regulations there, right? It kind of incentivizes you to buy something like Metaplanet instead of like Bitcoin. But I think that this cycle, like the whole concept of a Bitcoin treasury company without an underlying business, I think that ends because it's crazy. It's crazy if you think about it. And I told you guys this the other day. I had the pleasure of being able to. It's the first time I ever interviewed Jack Mallers in El Salvador at the Plan B forum, and he was even talking about how 21 has to pivot to produce a cash flowing business that's behind the Bitcoin treasury. I think this whole concept of having a Bitcoin treasury without having a business behind it, I think is hollow. I don't think the markets are buying into it anymore. And I think you'd be much better off just buying spot Bitcoin. Why are you going to do that? It doesn't make sense. That's my opinion on all this.
I would agree.
But anyways, so go back to like the original topic, because I do want to talk about that. Besides my personal opinion on the treasury companies, and all these treasury companies, by the way, this isn't just me saying this and just talking like old man screaming at the sky, whatever. Like every treasury company's like acknowledging this, and they're obviously pivoting because they realize this. But going back to the first thing that you were talking about, with the amount of Bitcoin they are buying, they're actively buying more of the supply than is actively being mined, right? At the end of the day, though, however, it seems like it's not really making a big dent in the current. Current market cycle.
Well, that's kind of where the second story leads. So let's cover Metaplanet's holdings real quick. We'll talk about those, so you guys know I'm not just spreading some fake news here. So you can see their last Bitcoin buy was December 30th of last year. And now you see another uptick. They added another 5,000 coins, getting over 40K. Obviously, the timing is interesting. I think personally, a lot of what we've been seeing from Saylor himself and probably the Metaplanet board is they are looking at the Bitcoin price, and they, I think, are all starting to get a little bit of the FOMO here, where they're like, hey, we got to acquire as much of this thing before it starts running, because we probably won't be able to stack again. If you've been in Bitcoin for a while, you know that feeling. The feeling of, hey, my dollars aren't going as far as they used to. We used to joke about, I remember when we would buying, million sats for $100, like those were good days. We were all feeling pretty good about ourselves in those days. Or if you've been in Bitcoin a lot earlier, it's like, $500 used to buy you coins, like now we're getting to the point where we're seeing millions, even $1 billion buys. And yeah, it's buying you a lot of Bitcoin, a couple thousand, but you're not going to be able to catch up to Saylor, who did this when Bitcoin was at low prices, and he was buying freaking hundreds, 20,000.
It's an entirely different model though, because again, like Saylor's like core bit, number one, he has first mover advantage. Number two, with that first mover advantage, I think he's able to offer, different products, specifically the fixed income product is the latest one, which is Stretch. But again, I would still say, like, the Stretch product only works if Bitcoin has that 20% CAGR moving forward.
You don't think that's going to happen?
I mean,
dude,
I think
enough bearishness. I can only take so much bearishness.
I think that's the minimum. I think from here 4 or 5 years out, after Bitcoin's had a 45% correction, do I think we're going to get at least a 20% CAGR? 100 million %, right?
21 million %.
Because we've already had a 45% correction. But I mean, like, take a look at the drop, bro. Like, if you bought the peak at if you bought the Bitcoin peak in 2021, we're at the Bitcoin peak of 2021 right now, right? So like it really depends when you bought Bitcoin. Because if you bought Bitcoin at the top of 2021, you waited 4 years.
Yeah, dude,
you're right. You're right back where you started.
We ran it back, bro. We ran it back,
right? So yeah, man. I mean, am I bullish on Bitcoin at these price levels? 100%, because we've already had a correction. We could see more of a correction. 100%. I'm not doubting that. But anyways, continue with the story.
Yeah. Let's keep going, because there is a news story that does kind of fall in line with what Nico was saying. Look, we are seeing arguably unprecedented amount of Bitcoin buys coming from Strategy and even Metaplanet. 5,000 buys or 5,000 Bitcoin buys, Sailors raising $42 billion of Bitcoin. And everyone's kind of wondering, like, well, if we are seeing all of these Bitcoin buys from these treasury companies, the question really remains in most people's heads: are they really buying Bitcoin if the price isn't going up? That's kind of what everyone's asking. Well, as we've been following along for the last couple of days, actually maybe weeks at this point, we realize, and now I think since we're getting, since we passed Q1, we start to see Q1 reports come out. We start to hear the news of where is the selling come from. We've been asking this question in the chat on the show. It's like, who is selling Bitcoin right now? And I think this is part of the broader conversation. This is why I was saying, it looks like we are seeing a consolidation moment happen in these Bitcoin treasury companies. I think, as a lot of people have been saying for a long time, winner is going to take all in the Bitcoin treasury companies, whether that's Strategy or Metaplanet in Japan, or I forget what the one is in the UK right now. I think this is it. Sorry guys. I think Nico's blaming me for my phone going off. It wasn't me. But we are seeing that the top dogs, the big treasury companies, I think, are the ones that are going to survive. And with what Sailor's doing with the stretch product, I think that's only going to increase. But we are starting to see that a lot of the Bitcoin treasury companies are starting to feel a little pain here. And that's where the second story kind of connects the dots here of like, well, if we're seeing 1,000 Bitcoin buys, why is the price going down? Well, we're seeing from the smaller Bitcoin treasury companies, they're selling Bitcoin. And maybe it's not as big of sells as the buys that we're currently seeing, but it is significant because it does paint a broader picture of what is going on in these Bitcoin treasury companies. So here's CoinDesk's headline: the Bitcoin treasury boom is unwinding as some companies and governments sell their holdings. Falling prices and prolonged consolidation are pushing public firms and sovereign holders to liquidate Bitcoin reserves to shore up their balance sheet. And again, this is a trend we've been seeing for the last couple of weeks. I can't even remember the amount of Bitcoin companies that have sold. I think it's been over public Bitcoin treasury companies that have sold Bitcoin in the last 2 months or so. I think it's up there around like 7 to 8 companies are starting to sell off a little bit of their Bitcoin holdings, which is obviously adding to the sell pressure that we are seeing. So even though Sailor's announcing billion-dollar buys, Metaplanet's announcing a 5,000 Bitcoin buy, there's still mine Bitcoin that's released daily that, yes, they are taking that much amount, 100 days, multiple days of the Bitcoin mine supply off the table. But we are seeing treasury companies start to sell. And this is where it starts getting interesting. Public companies, including Empery Digital, Genius Group, and Riot Platforms, have all sold Bitcoin this week, citing either debt repayment, liquidity needs, or strategic pivots into AI and HPC. The first points, I think, are the most interesting. That is why this headline is the Bitcoin treasury boom is most likely unwinding. And remember what Nico's thesis is here on the show, that the most likely capitulation moment that we're going to see in Bitcoin is going to come from these Bitcoin treasury companies, which does add to the idea of where are we in this bear market? When are we going to see a final sacrifice here? When are we going to see a Bitcoin treasury company blow up, which in all actualities, at least from our perspective, they seem to have taken a lot of the gains from the Bitcoin price. A lot of the euphoria that we saw on the run up after the Trump election was in the Bitcoin treasury companies. And now that's most likely where the capitulation is going to happen. Yes, it's going to have some selling pressure on the Bitcoin price. Yes, it's going to have an effect on the Bitcoin price, but let's look into this. So Hive Digital announced on Wednesday it sold 370 Bitcoin at an average price of 66K for 24.7 million, leaving the company with just 2,989 Bitcoin. So not the biggest sell, but they also released approximately 1,800 Bitcoin that had previously been held as collateral. So it's not that they're dumping all of this Bitcoin at once. They're kind of realizing their financials and noticing, oh man, we can't actually just sit on all this Bitcoin. We really have to release a lot more Bitcoin. There's more, Nico. There's more. Genius Group, an AI-powered Bitcoin-focused education company, held up to 440 Bitcoin in March of last year. They sold off 84 Bitcoin. Again, not the biggest number, but when you add it up, that's some sell pressure. Riot Platforms, which we've talked about in the last month or so, they're selling more. They supposedly moved 500 Bitcoin, so not sold yet, but they had about 1,900 Bitcoin, and now they're down to 17,500 Bitcoin. So they've sold 2,500 Bitcoin. Meanwhile, we're seeing the government of Bhutan, which was the kind of unsung hero of nation state accumulation of Bitcoin. They've sold 3,103 Bitcoin, and just a few days ago liquidated the final 375 Bitcoin. Well, not final, but another 374 batch of Bitcoin. And that doesn't even account for all of the other Bitcoin treasury companies that we've been following up on this show and telling you, look, they're selling. So this headline of the Bitcoin treasury boom is unwinding, it seems to actually be happening. And the thesis of the Bitcoin treasury capitulation is where the price dumps.
Where's that headline coming from?
CoinDesk.
CoinDesk. All right. Okay. So it's just a reputable source.
Ish.
Reputable. And then reputable
in our space,
in
yes.
the industry. I mean, called it. I said this. I predicted this was going to happen in October. I predicted this was going to happen in October. I told you guys, I said that this cycle, one of the indicators that we will start to see once we're starting to bottom out is a capitulation of a lot of these institutions. And you're seeing it industry-wide. It's like Bitcoin treasury companies, Bitcoin infrastructure companies. You have nation states like I didn't even know about the Kingdom of Bhutan, bro. Like that's crazy. And I told you guys this was going to happen, this cycle. It was in inevitability. And I remember I was reading it, and I think it was about one of the treasury companies, about how they are essentially a distressed seller, and that their average accumulation price was like above 100,000. It was like 111,000, and they were selling at 60 or 71 or something like that. So that they actively took on a loss on this. But I told you guys this was going to happen because this is what happens every single bear cycle. I think the only difference this cycle compared to the previous cycles is the amount of institutional adoption and the amount of institutional involvement this cycle. So the headlines are a lot more public, but the Wall Street cheat sheet psychology does not change, right?
Humans have not changed.
We did have a euphoric moment. We did have a euphoric moment in the previous cycle. That euphoric moment was when Michael Saylor threw a 100K party at his house. It was dope. I had a lot of fun. And when President Trump got elected, if you look at the Bitcoin versus gold price comparison, that is where Bitcoin and gold peaked, right? Now, the Bitcoin versus gold Bitcoin versus US dollar peak came much later in October, but that euphoric peak, I never forget it. Me and Opti were dropping shows, and we had literally thousands of people just on one platform on YouTube watching us live. And looking back on it, we were celebrating, we were euphoric, but the reason we didn't see it,
because we thought we were geniuses.
Hindsight is 2020. The reason we didn't see it is because you didn't have that crazy price run up. So that didn't allow us to see the obvious, but looking back in the past, of course, that was the euphoric top, right? And then of course the price top came later in October. Now, I think that this cycle, you're going to continue to see capitulation, not only in retail and individual holders of Bitcoin, but I think you're also going to see it. You're going to continue to see it in institutions and that have exposure to Bitcoin. That's my prediction. That's what I think is going to happen this cycle. And I got it right in October. I got it so right in October. And now the institutions and the companies that have built responsibly and have positioned themselves correctly from this are literally going to thrive in 2027, 2028, 2029. Nature is healing itself, right? This is what happens every single Bitcoin bear cycle. I think people have just forgot the past because the last time this happened was like 4 years ago, right? We had 3 years of a bull market, ladies and gentlemen. This is what people forget. We had 3 years of a bull market. We were expecting the euphoric top in 2025, but people forget that 2023 and 2024, we had a massive price run up. Like people forget that, right? So, you know, I think that the companies, the institutions, retail that survives until 2027, you're going to thrive in the next cycle. You're going to thrive in 2027, 2028, and 2029. And the last thing I'll say is Bitcoin bear markets are for building. This is where you want to build. This is where you want to double down. This is where you want to lay out all the infrastructure. This is where you want to develop the products that you're developing. You want to do it right now, because when the Bitcoin bull market comes back, and it inevitably will, in my opinion, you're going to be very well positioned to catch the wave. You don't want to start building once the wave commences. You want to start building before the wave commences so that you can catch the wave with the right, with the right stance, the right infrastructure already put into place. So I'm extremely long-term bullish on the Bitcoin companies that are continuing to build during the bear, because they're going to be the winners during the bull when the bull comes back. But to go back to Opti's point, yes, this is all part of the course. A lot of these, a lot of these companies and institutions, selling Bitcoin at a loss, selling it at lower levels, that is part of capitulation. That is part of bear markets. And if we head to lower price levels, the lower 40K region, the mid 40K region, higher, lower 50K region, again, you're going to see more capitulations. You're going to see more despair. But from a risk-adjusted return perspective, that happens to be the most opportune moment to get invested into Bitcoin, potentially to invest in some of these Bitcoin companies, specifically the ones that have the strong fundamentals, right? So anyways, that's my take on this whole thing. I've been telling you guys since October, I've been right so far. That doesn't mean I'm going to continue to be right for heading into the future. I told you guys that if for the next 6 months we stick around at this 60K, 70K region, I'll say, all right, we bottomed, right? But
6 months.
Yeah, for the next 6 months.
Bro, I can't do that.
If we stick around,
give me some pain. I need volatility, guys.
If we stick around at this region for the next 6 months, I would say, okay, we bottomed and it's only up from here. But I have yet to see that, right? So I'm just kind of waiting and seeing what's going to happen. But anyways, on a more positive note, I do have some videos to play for you guys from Cathie Wood and Lynn Alden regarding the price action. Cathie Wood thinks we're never going to see 80% corrections again, and Lynn Alden, both of them geniuses. You gotta stop saying that. Both of them geniuses. Lynn Alden is basically saying, like, right now is a great time to buy Bitcoin at these price levels. And by the way, I absolutely agree with her, because even if Bitcoin does go down to the 50K region, you're still fundamentally buying Bitcoin at a 45% discount. Like, you're still getting Bitcoin at a discount, right? So it might go a little bit lower, but like, you're still getting it 45% cheaper. And if it just reaches its all-time high, you're getting a 45% return. I think that in and of itself is excellent, right? So anyways, guys, buckle up. It seems like, some companies that are well run, are well positioned, are taking advantage of the dip. I don't know how Metaplanet is coming up with that money to buy that much Bitcoin.
Dude, Dylan LeClaire's a genius.
Yeah, he is an absolute genius.
Shouts out Dylan.
Strategy is obviously taking advantage of that opportunity. And then there are other companies that obviously, again, they have to sell some Bitcoin to endure the bear market. And that's completely normal. This is what the cycles are all about, ladies and gentlemen.
Yeah.
This is literally what they're all about. The only difference here, the only fundamental difference is that
the numbers bigger.
The numbers are bigger. The institutions that are involved are much bigger. Wall Street is now involved. It's not so much retail driven anymore. This same process happened to retail multiple times. The same exact thing, right? It's just happening more publicly now, right? But again, what is your long-term thesis of Bitcoin, right? At the end of the day, it doesn't change. It's infinity divided by 20, or is it
everything divided by
21 everything divided by 21 million.
Same difference. Well, you could say infinity. They're going to print infinity dollars soon.
So like the core thesis of Bitcoin doesn't change. It's the only asset on planet Earth that has absolute scarcity. There's only 21 million. It's censorship resistant. The physical characteristics allow you to take self-custody of it. It doesn't matter what the quantity of Bitcoin is. I think it's a superior asset. And I think the world's going to realize that. I think this next cycle coming up makes me really excited, because at that point, the companies that did decide to double down on Bitcoin will have been absolutely 100% vindicated. And I think that creates a domino effect on Wall Street. Anyways, guys, we have to move on to the next segment. We have Frank Holmes, executive chairman of Hive Digital Technologies, joining us a little bit later to talk about Bitcoin mining. Anyways, let's start the show. We're going to be right back in just a bit. Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded, non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? Stampseed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates, instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They're also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on Stampseed and use promo code SIMPLY to get 15% off anything on the stampseed.com store. All right, everybody. I do want to give a shout out to our sponsor, the Stamp Seed. Guys, don't write down your words on paper. Stamp them into titanium so they survive the test of time. Remember, your seed words, your seed phrases is essentially it's your money, right? You don't want to write down or back up your money on a piece of paper. The paper could, again, if you have children, they could rip it. It could catch on fire, water could damage it. You want to literally stamp your seed into a plate of titanium. The Stamp Seed kit comes with everything you'll need so that you could do that in the privacy of your own home. Head over to stampseed.com today. This is the 12-word seed plate, by the way, pure titanium. Look at that. It's titanium. Stampseed.com today. Use promo code SIMPLY. Get 15% off anything on the store. At the time of recording, the Bitcoin price is $67,340. Sats per dollar, 1,485. Block height, 943,386. Realized monetary inflation, 0.83%. Market cap of Bitcoin, 1.35 trillion. Bitcoin versus gold market cap, 4.49%. Percentage issued, 95.28%. Decline from all-time high, 46.6%. So if you're buying Bitcoin right now, you're getting it at a 46% discount. That's a big discount. Anyways, I got some treats for you guys. I got some videos of Lynn Alden and Cathie Wood on CNBC, and they're talking about the current market downturn, how opportune it is to buy Bitcoin at these current price levels, and Cathie Wood's opinion on she doesn't believe we'll ever see 80% corrections ever again. So I'll let you guys hear it from them. Let's check it out. First video is Cathie Wood.
Yes, I think what we're seeing now is the institutionalization of this new asset class that has a very low correlation with other asset classes. So believe it or not, in the Bitcoin community, down 50%, if that's as far as it goes, they'll consider that a real victory, because you're right. The 85, 95% collapses associated with a very new technology. That's done. This is a proven technology. It's a proven monetary system, and it's a new asset class.
So do you believe that?
I want to believe. I really do want to believe. I have been saying that for a minute. Do I know for a fact that that's going to happen? No, but I do agree with what she said in terms of if we don't see an 80% correction, that's totally a W. That's totally an overall win here.
I'll step in. I'll say I don't think we'll see an 80% correction, dude.
Hold the horses here, Nico. You've been making the case for literally 6 months that we're going to 30, 40K. Now you're saying we're not going to 80%.
That's a 70% correction.
Oh, okay.
That's a 70% correction.
What's 80? 20?
70% correction puts us at I think it's 39, 40.
80 would be 29.
I don't think we'll go to 20.
We're not going 80.
There's no way.
It's 70% still a win, or is that still just Bitcoin doing Bitcoin?
I think it's Bitcoin doing Bitcoin. I think people underestimate how much the halving cycle is completely intact. It's never broken.
Well, if we only go this low,
it's still.
Are you still 4-year cycle maxi forever?
It's still intact. I mean, it's playing out
timing wise.
It's playing out timing wise. The supposed bottom is in October. That's the supposed bottom.
Cooked.
So what's Bitcoin going to do from here till October? If Bitcoin has this massive capitulation event in over the summer in the next couple of months, then maybe I'll change my mind, right? And by the way, 50K is the floor. So let's talk about the 50K, 59. So the 200 week, I think it's the 200 week moving average is around 59K. But if you take a look, at Bitcoin's price action during bear markets, it's known to spend some time under the 200 week moving average. So the current 200 week moving average is about 59K.
It's currently at
54K. I thought it was higher.
Well,
I'm pretty sure it was higher.
This is what I'm saying. Look, I'll show you. I'll show you.
I saw Adam Back talks about it.
Well, it could be the EMA and not just the pure MA. So yeah.
Anyways, so the 200,
it's roughly around the same.
The 200 week moving average historically, right? Bitcoin in a bear market always tends to touch that again, right? So Opties is saying 54, Adam back saying 58, 59K. This is a bear market, so we should tap that line again, right? Now, every other bear market, Bitcoin not only taps that line, but actually spends some time under that line. It doesn't spend that much time under that line, but it does spend some time under that line. So this leads me to the second video of Lynn Alden, also on CNBC, talking about Bitcoin. Let's check it out.
Is Bitcoin a buying opportunity?
I do. I think Bitcoin's a buying opportunity. I also think, Latin American banks, for example, airlines, airports. I think these things don't necessarily bounce back quickly. But once we do have a light at the end of the tunnel, I think some of those beaten down areas have a lot of upside.
I 100% agree with Lynn, right? But
did she say buy Latin American Airlines?
No, but that has nothing to do with what we're talking about.
I know, but
Focus,
that's kind of crazy.
Focus, Opti.
That's crazy.
Anyways, if you guys are enjoying the show so far, make sure to smash that like button. Shout out to 1,000 live viewers across all platforms. Shout out to you guys on Rumble. Shout out to you guys on YouTube. Shout out to you guys on Nostr. Thank you for the zaps on Nostr. Shout out to you guys on X. Again, if you guys are enjoying the show, make sure to smash that like button and, of course, follow or subscribe to Simply Bitcoin. Anyways, back to the topic before Opti started talking about Latin American Airlines.
I didn't talk about that. She did.
No, but you brought it up. You brought it up. It has nothing to do.
I'm just clarifying here.
Simply Latin American Airlines.
Honestly, that's a good pivot. They were asking us what we're going to pivot if we don't go up ever again.
We're never pivoting, bro. We're going
Simply Latin American Airlines.
At Simply Bitcoin, we're going down with the ship if that is our destiny. Anyways, okay. So, let's focus on what Lynn said. So Lynn said the great buying opportunities, but she also said that it's not necessarily true that they're going to be quick to recover, right? But again, if you're thinking on a 1 to 2 to 3 year time scale, I 100% agree with Lynn. So if you want to put what Cathie Wood said, she doesn't believe we'll have 80% drawdowns anymore. If you put together what Lynn Alden said on CNBC, so public national TV, she's saying the quiet part out loud, ladies and gentlemen. She is saying literally, hey guys, you know what? It's probably a good time to buy Bitcoin if you have, low time preference. Now, what's really interesting about Cathie Wood's comment is, you notice how she didn't say 70%? She said 80%. So the reason I'm saying this is every single cycle, Bitcoin actually has the bear market is better than the last bear market. So if you go back to the early bear markets, the corrections were like 80%. If you go back to the previous, like the last couple bear markets, they're in the high 70 region. Then it was like the mid 70 region. So if that trend continues, and I think it will, right? You're looking at a 60 to 70% correction maximum. And again, this is not putting into account a black swan type of event, of course, right? But that's my opinion on this. Like, guys, from a risk-adjusted return perspective, this is a great time to be buying Bitcoin or companies that are involved in the Bitcoin space that are well run. I think it's a very good time to do that. Of course, they can go lower. Bitcoin can go lower. But again, from a dollar cost averaging perspective, this is a great time, in my opinion, right? And I think the question on everybody's minds, this is what Lynn was referring to when she was talking about it, is when are we going to start to see that light at the end of the tunnel? I was right in October. I'm going to give you my perspective here now in the beginning of April. I think we're going to see that light at the end of the tunnel, either during the summer when, if we have a capitulation event, or towards the end of the year. I think we'll start to see that light at the end of the tunnel. But we might see more pain up until that point, right? It would be great if we just stuck at these prices, but it also would be extremely boring at the same time. Like it'd be difficult to talk about things. Like what else are we going to talk about if Bitcoin
maybe
just goes sideways for an entire year?
Maybe the light at the end of the tunnel is really a train and we're cooked.
Oh my god, like the cartoons.
Yeah, like the cartoons.
No, man.
I
think Bitcoin's going to the moon.
I know, I agree. I'm just trolling.
Bitcoin's going to the moon. I think it's just gonna take some time, right?
I'm trolling. I'm
Anyways,
just black today.
I do want to
today.
get to the news segment because we do have a lot of things to talk about. And then, like I told you guys, we have Frank Holmes joining us in about 10-15 minutes. He's the chairman of Hive Digital Technologies. We're going to be talking about some misconceptions about Bitcoin mining. I'm really looking forward to that. Always love when Frank comes on the show, drops pure signal. Anyways, everybody, we'll be right back in just a bit. I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Ledin lets you unlock the liquidity in your Bitcoin without ever having to sell it. Since 2018, they've issued over $10 billion in loans to more than 10,000 customers worldwide. I love these guys, and not only do I have an account with them, I also have a loan. And here's what really sets them apart. There are no monthly payments, and you can pay back the loan at any time. Once you send your Bitcoin as collateral, you can have cash in your account within 24 hours. Ledin has over 1,000 five-star customer reviews, and they've never lost a single dollar or single sat of customer funds. So if you want to tap into the wealth of your Bitcoin without having to sell it, head over to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY. All right, ladies and gentlemen, we are back, and we got a special guest joining us today. The one, the only, Bulldog Holmes, a.k.a. Frank Holmes, Executive Chairman of Hive Digital Technologies. Frank, thank you so much for joining us on the show today.
Great to be rolling with you.
Frank, so lots of things to talk about, and I thought this topic was interesting and fascinating, and I actually and I want to talk about this with our audience, and let's break down what Bitcoin mining actually is. Because I think that there's this misconception, perhaps, in the public that Bitcoin mining is like the California gold rush. Prospectors digging through dirt, crushing rock, walking away with shiny physical gold coins they could hold in their hands. But that's a completely wrong conception of what Bitcoin mining is. So, of course, who better to bring than to talk about this topic than, of course, the legend Frank Holmes. Hive is the first publicly traded Bitcoin miner, for anyone who doesn't know, by the way, BTWs. So Frank, let's talk about this topic.
Well, it's an important topic because we have noticed that government agencies in the Nordic countries, in Paraguay also, and in Canada, they think that you have an ATM machine basically, and you run through energy through the ASIC chips and out pop these little coins, and then you're trading them to the public like you're selling popsicles. And it's really bizarre, but it's true. It's how they think about it. So I was talking to guys that were building data centers. This is a few years back, and they were building in Venezuela. And guys came with rifles and guns to rob their Bitcoin from the data center. And the guys, they're Croatian engineers, and they said they had to run out of the back door, and they're running and going and hiding because literally this is what people think, that there's these coins there. And then you get the more sophisticated level that think it's you're still having some way of having a wallet in your facility, that the Bitcoins go into a wallet. It just doesn't happen that way. And so for simplicity, we basically sell hashing power. That's what we do. And we sell hashing power to Foundry, which is a US audited pool, Bitcoin pool, and SOC 1 and 2 compliant. So it meets all those regulatory requirements. We sell hashing power to them. And based on the amount of hashing power we are able to sell to them on a daily basis, they will give back our pro rata number of virgin Bitcoins. So they're they're the ones that are manufacturing, if you want to think of it that way. And they pay us in Bermuda because we have to function over all these different jurisdictions. But there are people and governments and tax people in Canada and in Sweden that we know that think that we're trading in the public, we are an exchange, we do this, we do that, and it just doesn't happen. And what's really interesting, Nico, it's the same thing for AI. Basically, you're the large language model working at the University of Columbia, and you're running your model, so you need the power, the compute power, so you come and rent our GPU chips, but you pay us in US dollars, you're not paying us in Bitcoin. And so a lot of people think that when you're running large language models that you now own those large language models in your data center. That's not true. Those large language models are basically back whoever want to write them and create them. It's their proprietary, their IP, their product. And so that was the big part that people realize that. So now we get paid in Bermuda. We sell the hashing power. We get paid 10 Bitcoin a day. It drops off into Bermuda, and then we can leave on the balance sheet, or we have to sell to pay electricity bills, which we have to pay with dollars or Corona, but we have usually it's US dollars we're paying with.
Yeah, and I think that's like it's a big misconception, Frank, because the Bitcoin never touches the local financial system, right? And I think that's the mental hurdle. That, and again, it requires education, right? Because it comes, it's like, oh, this is Bitcoin mining, so people assume it's the same as gold mining, right? They assume there's like a physical component to this, and there is a physical component to this, but all of this, the Bitcoin, it's all digital, right? It's all digital, and at the end of the day, when you were describing the pool, you're pulling up your resources with Foundry so that you can have a consistent payout, and then that is getting paid out to an entity in Bermuda. So again,
but it's all audited. You know, think about it. It's SOX 1 and 2 compliant. It's in the U.S. safe jurisdiction. It's not in some third world country where there's no rules or regulations. It's in a regulated environment. And what we want to make sure is that we got the virgin coins, and that's what we get.
Frank, what fascinates me the most is I understand how this could happen with Bitcoin, right? Like, I understand, when you hear about Bitcoin mining, it's like, oh, these Bitcoin ATMs. And I love the example, in the example in Venezuela where people just showed up and they said, hey, give me this Bitcoin. that example was a great example. I understand how regulators and politicians could get confused and they could think as Bitcoin mining as gold mining. What's really interesting to me about this conversation is, why do you think they get confused with AI, right? Because I feel like, it's different, wouldn't you say?
Yeah, but really, we're selling compute power. And that user wants to know what chips you have. Is it an H100 or is it more powerful, the H200? Or they have new levels of chips from NVIDIA. Now they're getting up to Bugattis from Lamborghinis, what they're making. And so they're really caught up with that. But they'll pay us more per hour to have access to that motor. But it's the output, the product created from running it through that high performance engine. It's theirs. It's not ours.
Yeah, of course. They're coming to you guys for the infrastructure. They're coming to you guys for the computing power. They're paying for the computing power, but ultimately you guys are not deciding what they're doing with that computing power.
It's the same, but they think AI is different than Bitcoin mining. That's the thing that blows me away, that you have actually educated people that still think that Bitcoin is, you have this ATM or wallet there, and it just doesn't happen that way. But they say, oh, AI is cool and that's okay, but not Bitcoin mining. But actually, they're just data centers with more complexity. Tier 1 data center is a lot less expensive per megawatt than tier 3. 1 million versus 10 million per megawatt, the construction, because you need so much more air conditioning for GPU chips. And so that makes the big difference. But the whole idea that you're selling compute, that's really what you're doing. And our mechanism is that we sell compute to a Foundry, and Foundry turns around and rewards us based on the hashing power that we're selling to them in Bitcoin.
Absolutely. And Frank, let's talk about another misconception as well, which to me, this was the most fascinating when I was going down the Bitcoin rabbit hole, is this idea that Bitcoin mining wastes energy. And the way that I phrase it in my mind is Bitcoin mining gives value to energy that would otherwise go to waste. Do you want to elaborate a little bit on that? Because again, this is another big misconception with the public. There was a big marketing campaign to really push this. You heard it's like Bitcoin mining uses more energy than the country of Denmark, without getting into the nuance of what energy is Bitcoin mining using, because you can't set up a Bitcoin mine in the middle of Manhattan. It would be uneconomical. So Frank, could you talk a little bit about that?
Well, they're really scrappy entrepreneurs, and they went out and sourced stranded electricity or surplus electricity that was going nowhere. It wasn't being used. And local communities said, great, we're going to have some economic revenue from this surplus or stranded electricity. Stranded means it's not hooked up to a grid that a major utility is going to buy your electricity from. And you can see that in a lot of emerging countries, especially when they went to Ethiopia, they built these big hydro dams, but there was no real national grid. So the electricity was basically comes to a halt. It goes nowhere. And in comes Bitcoin miners to build up the infrastructure and the substation, then bring in the transformers, and they're all of a sudden creating economic viability from this stranded electricity. In West Texas, it was predominantly a surplus of electricity that came from flare gas, that came from solar and wind. Huge wind farms that were built all through West Texas. So where was that electricity going? There were a couple of days in Houston that it went to zero, your cost of electricity as a consumer, because they had this surplus electricity. And so now they have this almost stranded electricity, and they start building up this massive Bitcoin operation. Well, today is the largest spend in America in Abilene, Texas, for $500 billion spend.
Wow. And then Frank, I also want to talk about the secondary effects, right? So not only are you monetizing energy that otherwise would be, it'd be stranded, you're also producing you're also creating high skilled jobs, right? You're also creating revenue for those local governments that otherwise wouldn't have that tax revenue as well. So there's secondary effects of creating these data centers, right? Whether it's tier 1 or the GPU tier, I think it's tier 3. Is that correct, Frank?
Correct.
I'm learning as I go. So could you talk about the secondary effects, right? And I saw some of those. I had the and shout out to the Hive team, had the privilege and the honor of being able to see the Hive site in Paraguay. And I visited a local school. So there are secondary effects to Bitcoin miners building out these tier 1 centers and building out the infrastructure, and how that actually helps out the local community. So could you talk a little bit about that, Frank?
Well, when you look at the capex that goes into a data center, tier 1, 2, and 3, tier 1 creates the most jobs short term. And it's the mechanism, tier 1 data centers, is you've sourced the electricity, you've bought the land, and then you use predominantly local contractors to dig up the ground, lay the cement, put up the steel girders. You're building that basic infrastructure, which has the biggest multiplying effect short term for job creation. And when you look at after the data center's been built, you can turn around and create these data center jobs that are it's not huge compared to the construction. When you go tier 3, the biggest cost, like 95% of the cost, is really the NVIDIA chips and the infrastructure that goes around those chips. Those chips are very, very expensive. We were doing costs for clusters, our recent cluster, it's like $70,000 a chip to create that network for that chip to be slid into. So those chips are very, very valuable, more than an ounce of gold, substantially more. And so when you get them delivered, you have to have them delivered with security guards.
Wow, I didn't know that.
and because they're extremely valuable, and you have to have big security around those data centers because the value of those chips. And the other interesting part which has happened is that the GPU chip market is now become an asset class. So we saw this evolve 40 years ago with car loans, secondary car loans. All of a sudden people would buy that loan package. It became an asset class. And you could go and buy other types of industries if they get big enough. Well, in this past year, GPU chip lending has all of a sudden evolved that is not just a bank. There are hedge funds, and they're charging between 7 and 11% for the cost to buy the GPU chips. So you borrow money from them at 7%, I buy the chips, I use capital to go build the building, and I have a client that's going to use that compute power. So the mechanism is evolving very rapidly for the value of these GPU chips, because they found, unlike ASIC chips go down in value and they don't really get a bounce back up. Just because more people have come in, the difficulty has been rising. But with GPU chips, it's a different market. We know from our A40s, which we purchased 5 years ago, we depreciated them over 4 years, got our money back from mining Ethereum. Then we had them using them for AI business, and we can get almost 75% of the value for them.
Wow. It's still today, despite,
today.
That's unheard of with ASICs. That's unheard of course.
That's
wow.
not gonna happen with ASIC chips. And so what we're seeing is that the Bitcoin miners were the first to go and get the electrical contract, buy the land, and then get the permitting to build a substation. Today, to go do that for an AI factory, it's a long lead time, to get the HVAC equipment's like 50 weeks of waiting for it. The air conditioning components are extremely expensive. You can get the NVIDIA chips faster than you can get all the air conditioning components. And so what's happening is the market is saying the best place to go is go to the Bitcoin miners, because they already have the electricity, they already have the land, they built the substation. Now we have to upgrade the facilities. So not $1 million a megawatt. We have to spend another 7 to 10 million to upgrade the facility with more air conditioning units because these GPU chips give off so much heat. You need more air conditioning. So the fastest path is to go where the Bitcoin miners are. And that's what we've seen, where the Weave went after Core Scientific, and then a hedge fund came in to stop it, etc. But they had a joint venture, and they said it's best for us just to buy them. We've seen Cypress and Hut 8 go and basically sell the real estate. It's like a real estate contract and getting a tenant. So if you owned a building and you got a 15-year tenant from JP Morgan's your tenant, that tenant for 15 years is extremely valuable to a bank to lend you money.
Absolutely, because it's consistent and it's a reliable tenant, right? It's a consistent and reliable tenant.
So if you
for a long period of time.
If you have AWS, you have Azure, or you have some of these hyperscalers coming in to a Bitcoin miner and saying, we will take all your electricity. You're no longer be doing a Bitcoin mining. You're going to do AI. We will give you this long-term contract. And that all of a sudden creates a new valuation that many of these sort of Bitcoin miners that are able to get a long-term contract are being re-rated as a real estate play. So they're really not a Bitcoin miner, they're a real estate play. And some of them have made comments about becoming a REIT, like Digital Realty. And when I first went down this path to learn about realty companies, I bought some shares in Digital Realty. And I track them, and they have great content on their quarterly earnings releases, etc. But they trade at a huge multiple forward revenue, forward earnings. So if you looked at Hive, you would say, well, what is your forward revenue looking like? What's your market cap? It's 3 times. But if you had a hyperscaler long-term contract, well, all of a sudden you're trading at 8 to 10 times next year's revenue. So you've seen this sort of 2-tier market, and it's because analysts from the buy side are looking at this conversion to a real estate play.
This is fascinating. Frank, there is one thing that I wanted to ask you on, right? Because now I understand tier 3 centers and I understand tier 1 centers. I don't think we've ever talked about tier 2 center. What is a tier 2 center?
Well, it has a little more air conditioning. Okay. And it has a little more. It has more memory. A lot of like rack space would be more tier 2. If you're going to start becoming an AI factory, then 40% of your electrical bill is air conditioning. That's the big difference. So if you have 100 megawatts, you might have 5 of the 100 for air conditioning for a Bitcoin mining tier 1 operator. If you're going to go tier 3 for AI factory, it's going to be 40% of your energy is for cooling the GPU chips.
Gotcha. This is I'm every time Frank comes on the show, I learn so much. I really appreciate it. It seems like the audience is loving it as well. Smash the like button, everybody. Frank, I just want to clarify this, right? Which is you guys are not competing with local residents and businesses for power. You guys are actually putting wasted energy to productive use. Is that correct?
That's exactly what's taken place. And we've also have a very strong, focused, which is not a buzzword today, ESG strategy in all the communities that we're involved with. And especially when you go to Sweden, sponsoring 12 hockey teams, sponsoring the hockey arena, which is a big saving for the city, little town of Boden. We cover those costs. So we are very much involved in the community, and you visit the schools that in Paraguay, within 1 kilometer of our data center, we refurbished these country schools, which still have an outhouse for going to the bathroom that wasn't built, maybe 40 years ago, 50 years ago. So we rebuilt that. But more important for the students is that we bring in air conditioning, and it's very hot there. It's in the winter, it's like 80 degrees, and in the summer, it's 110. So we're lighting up communities at nighttime. So that's part of our ambition to make sure that we're helping the local communities. And when after to build a new substation, we said that the extra 100 megawatts, which would allow us, it has to be for the community, not for another Bitcoin mining or a company, any business. It has to be the electricity surplus that we create from our power station is going to be used for the community. And that's how we think. And it's a win-win because the utility doesn't have that capital to build that substation. It's $30 to $40 million in Paraguay. And so we have a very focused model that's inclusive within 1 kilometer from where we function.
Absolutely. And I saw it. I saw it in person. Right. And it's beautiful. Right. You know, because fundamentally kids are the future. And, you know, providing AC so they can learn, right? And ultimately it was Bitcoin that did this. It was Bitcoin that created the incentive for Hive to come in there and build out all this infrastructure, and it creates a win-win situation for the local government, you know, the local residents, and obviously Hive and the public markets as a whole. So it's aligned incentives, and it's one of the most beautiful things that I love about Bitcoin.
Well, thank you. And I want to add to it that we've created new designs for tier 1 and how you can convert that into making robotics. You can convert that into other industries, and you can convert that into a tier 3 high performance computing data center. So you want to, when you go to build this tier 1 data center today, when you look at the weight of the racking space and the height of the racking space and all the components and the HVAC that's necessary, you need a different cement floor. You need something that's deeper and thicker that has other magical ingredients. It's like making a cake, and what other flavors do you want to put in that cake? So it has this other strength to it. So there's more of a thought process going into what we're scaling in Paraguay, so that these tier 1 data centers very quickly can become tier 3 or be transformed into manufactured. Like Dell Computers in Sao Paulo manufactures notebooks and laptops, etc. Well, you need a certain facility that could do that. So you need a tier 1 basic infrastructure, because you have all the electrical, you have the water, you have the thick floors, you have the loading docks all prepared in advance. So therefore, it's easy to scale to tier 3.
I love that. I love the fact to me, the most fascinating thing, Frank, about all this, and I think we actually had this conversation, you opened my eyes to this at Mining Disrupt, is Bitcoin miners really were the pioneers, right? They really, you know, they really went into, you know, these places that were not developed, and they built out these tier 1 systems that now could potentially be turned into, you know, a tier 3 system for AI, or as you said, manufacturing. But ultimately is really Bitcoin that created that initial incentive. And as a Bitcoiner, that makes me very proud, and that makes me very happy. So it's super, super cool to see that. Frank Holmes, thank you so much for joining us on Simply Bitcoin Live today. Guys, go give Bulldog Holmes a follow on X for some great takes. He's been dropping some AI memes recently. They've been really, really cool.
Hey, you know who designs those?
I heard, but I want you to say it.
It's my daughter. She's
amazing.
10 years old.
Amazing.
And it's part of her bonding going to school in the morning that she's becoming this expert in Bitcoin. And she uses Grok, and she writes in long prompts to create these. So it's a great way for father and daughter to bond, and then people love them. So now she wants to know, which one do they love the most?
They've been amazing, and I remember Frank was sending them to me Frank was sending them to me, and I saw them. I was like, these are really, really good. And then I heard more of the backstory. But Frank, always a pleasure to have you on the show, guys. If you want to find out more about Hive, go to hivedigitaltechnologies.com. The link is in the video/podcast description. Go give them a follow on X. They're dropping really good memes and really good signal, and always a pleasure, Frank, having you on the show. The audience loves it as well. Thank you so much for joining us.
Thank you, Nico.
Appreciate it. All right, Opti. Well, we got the culture segment coming up, and we got lots to talk about. But yeah, man, I love Frank coming on, man. I wish you came with me to Paraguay, dude. I think it would have blew your mind seeing Itapu Dam and the amount of energy, bro. It was crazy.
Yeah, I think I was a little busy that week doing the show.
Oh man, maybe we should have asked Luke and Sophie to do the show.
Dude, maybe I need a break. I don't know.
You took a break. You took a break, dude.
Not really. I need like a real vacation.
Anyways, speaking of breaks, guys, we're gonna be right back. We got some interesting stuff to cover. Fannie Mae approves Bitcoin as collateral for mortgages. We knew this was coming. It's happening. It's here. We're going to talk a little bit more about that right after the break in just a bit. I want to give a shout out to our partner, Hive Digital Technologies. Fueled by clean energy, Hive has quadrupled its global Bitcoin mining footprint and channels that same scale into high performance compute, where their AI cloud is now ranked #1 in the world for network performance. At Hive, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at Hive Digital Tech or at hivedigitaltech.com. All right, everybody, we are back. And I do want to show, did they change the what is going on here?
I don't know. Our streaming software is having all kinds of issues.
Can we not share a screen? Okay, no, I can. Anyways, this is what I wanted to talk about today during the culture segment, because this is kind of cultural. I will say this. Buy home with Bitcoin. Coinbase, Fannie Mae bring crypto mortgages to mainstream buyers. Coinbase is partnering with Better Home and Finance to roll out crypto-backed mortgage backed by Fannie Mae, marking a step forward, integrating digital assets into traditional housing finance. The new offering allows qualified borrowers to pledge BTC or USDC as collateral for a down payment without selling their holdings, avoiding potential capital gains taxes while maintaining exposure to their assets. Structured as conforming loans, the mortgages carry the same standards and protections as traditional Fannie Mae backed loans. Better originates and services the loans, while Coinbase, I think there's a typo there, while Coinbase provides custody and infrastructure for the pledged Bitcoin or crypto. The product targets a long-standing barrier in the housing market, the upfront cost of a down payment. According to Better, roughly 41% of American families fail to purchase homes due to inefficient liquid cash. Quote, for decades, the path to home ownership has required Americans to sell assets, liquidate investments, or withdraw retirement savings. Quote, this partnership introduces a new pathway for millions of Americans who hold digital assets. The company estimates that around 52 million Americans, roughly 20% of adults, have owned digital assets, according to a company press release. By allowing borrowers to pledge crypto instead of cash, the product aims to unlock that balance sheet for housing access. Unlike traditional crypto-backed lending, the mortgages are designed to minimize volatility risk for borrowers. The loans do not include margin calls or collateral top-ups. That's nice. If Bitcoin price falls, borrowers are not required to add more collateral, and market movements alone do not trigger liquidations. Collateral is only at risk if a borrower becomes at least 60 days delinquent on mortgage payments, aligning with standard foreclosure timelines in conventional housing finance. So I think the only reason they're able to do this is because the piece of real estate itself is functioning as a form of collateral, right? Versus if there wasn't another form of collateral, they wouldn't be able to do this, right? So they actually, the lender actually has two forms of collateral. They have Bitcoin as a form of collateral, and they have the piece of real estate as a form of collateral. I mean, this is a no-brainer to whoever's offering this. Because again, there's very little risk to the lender, right? Interest rates on the crypto-backed structure are expected to be higher than the standard 30-year mortgages by roughly 0.5 to 1.5 percentage points, depending on borrower profiles. Still, Coinbase argues the trade-off may be worth it if for borrowers seeking to avoid liquidating assets. So this is, I think, like a huge game changer that I don't think we're going to see the full effects of for many years. And the reason I'm saying that is the vast majority of people that own real estate right now are the younger, the older generation, specifically the boomers. And I'll leave it at that. And the younger generations have essentially been priced out in many locations, right? Real estate is too expensive, so they have resorted to renting, right? I think this is a great product to offer to younger, the younger generations that essentially have been priced out. They don't want to sell their assets. This is a game changer, in my opinion. But obviously, you got to read between the lines, man, because it's not just loans for it. The collateral isn't just your Bitcoin. The collateral is a piece of real estate that you're in as well, right? So anyways, I thought I would say that, and I'm sure that there's going to be more companies that are going to follow in the footsteps of Coinbase. I'm 100% sure that, Ledin is going to offer something similar in the future. But very exciting, man. The things that you can do with your Bitcoin, it's exciting. You don't have to sell it. This is the whole thesis with Mark Moss, right? The whole thesis with Mark Moss is like, look, like, you don't have to sell your assets, just take on debt. That way you don't have to pay capital gains. You don't have to incur capital gains tax on that. And that way you can actually pass on some assets to, the next generation. I think that's something that people don't talk a lot about enough, right? Which is like, you have this concept of retirement, which is like, look, like, if I reach a certain liquid net worth, I'm going to be able to retire because I'm going to be able to take out a certain amount of, money every single year, for the next, 20, 30 years. But that's a terrible way of looking at it, because essentially your net worth just gets progressively lower over time, versus I think the way that you should be looking at it is, if you believe, and Michael Saylor built an entire product around this belief, right? If you believe that Bitcoin's going to have a 20% CAGR moving forward into the future, and you take out a loan, right now the loans on Ledin are like, I think like around 11%, and then they get lower depending on the size. Go check it out. It's a no-brainer. It's a no-brainer, right? Because the asset that you're borrowing against is appreciating more than the loan amount, right? Than the yearly interest rate that you have to pay on the loan. So you're actually in the green by like roughly like 10%. Like, it's a no-brainer, right? In theory. Oh, no. I mean, not only in theory. Like, obviously it comes with risks, right? Because again, if you buy the top, I don't think you're going to get a 20% CAGR. But if you buy the bottom, like, I think you're going to get more than a 20% CAGR.
I was basically just trolling that. How are we going to get another 20% CAGR year over year?
Look, someone in the chat already said it. Like, I've done it since 2017.
Chad,
right? So anyways, I do want to mention,
all I want to say is I'm old enough to remember Fannie Mae, and I wouldn't be giving up my Bitcoin.
What do you mean?
I don't know. I'm pretty sure Fannie Mae was one of the big companies that was caught up in the 2008 crisis, but what do I know?
I think it's an Overton window shift, but we are seeing other things, Miko.
I think borrowing against Bitcoin is an absolute no-brainer. By the way, our partner Ledin, which is fantastic. If you do want to take a Bitcoin collateralized loan, I think right now is the most opportune time with Bitcoin being 45% down. It definitely eliminates a lot of the risk. But big announcement, for loans under $250,000, the APR is 11.49%. For loans between $250,000 and $500,000, the APR is 10.99%. For $500,000 to $1 million, the APR is 10.49%. And for $1 million plus, the APR is 9.99%. Better rate, same protection. Go check out Ledin right now. There's a link in the video description. If it's your first loan, you get 0.25% off your first loan. Absolutely love the guys over at Ledin. Unlike Coinbase, they have proof of reserves and they have a proven track record, and they're a Bitcoin only company. So absolutely love Ledin. Go to ledin.io, use the link, and you'll get a discount. Anyways, if you guys enjoyed today's show, you know what to do. Smash the like button. Also, I do want to give a shout out to our sponsor, the Bitcoin Conference. This is Bitcoin 2026. It's coming up this month, ladies and gentlemen, less than 30 days. If you scan the QR code, it'll take you to the website. It's April 27th through the 29th. The speaker list is absolutely crazy. Of course, you have Michael Saylor going. You have Afro Man. Major announcement. Afro Man.
Yeah. Can we talk about his freedom of speech case? That was
Afro
hilarious.
Man, who had the craziest case. Let's talk about that. It's part of the culture, brother.
I don't really know that much.
The TLDR. Some cops raided his house, right? And they were like seeking for like
3 years ago. He made 3 albums about it, talking mad.
And they raided his house. They found nothing. He had to pay like $5,000 or something to like fix up the house. He was super pissed. So he decided to make out like
the funniest songs ever.
3 songs about it.
No, I think it was like 3 albums.
3 albums about it. And like if you watch these albums, they're absolutely hysterical because he takes camera footage from his house and he's just talking shit about the cops. Like it oh my God. And then there was
then wins the case, and now he's at the Bitcoin conference.
One of the cops, like I think one of the songs was like called like Yellow Cake or something.
Yeah. Apparently he was looking at the yellow cake.
And apparently one of the cops like ate the yellow cake, or they looked at the yellow cake. Anyways, look, it was just
lemon pound cake in the chat saying lemon pound cake.
Lemon pound cake. It was a yellow cake.
Oh, yellow cake's Dave Chappelle.
No,
all right.
Dave Chappelle.
All right,
bro.
whatever, dude. I'm a millennial. Whatever.
The Dave Chappelle skit it sticks in my mind, man. It's so funny, bro. So lemon pound cake. All right, to clarify, you guys got to listen to these songs. They're
lemon
hilarious.
Pound cake is
But the reason I'm bringing this up is this happened back in like 2021, 2022, okay? And the case that basically the police department got really pissed off that I saw Afrojack over the weekend. I went to Ultra with Opti.
Dude, docs.
So I'm like, I'm confusing the two.
Docs.
Afro Man, they got really pissed off that Afro Man made a album, and they sued Afro Man for it was like defamation or like libel or something like that.
Yeah.
And the case just resolved. Afro Man won the case. This is why,
huge win for free speech.
Huge win for free speech, but this is why it's part of the discussion. So anyways, here's the TLDR. They raid this dude's house. They find nothing. There's thousands of dollars in damages. Apparently they ate his lemon pound cake.
He just looked at the lemon pound cake.
They just looked at the lemon pound cake. The police department got pissed off because he made music about it. The music went viral. The police department sued him, and then he
won the case.
They lost, and he won the case. Right. So,
Shouts
and remember,
Afro
Man is the legendary artist that created the song "Because I Got."
We can say it, right?
Because I got up.
God, I got down.
Because I got up. Because I got up.
Dude, you're such
because
a
I got up.
Also, Palmdale native. Shouts out to him.
Anyways, that was today's show. If you guys enjoyed the show, you know what to do. Smash the like button. Consider subscribing to Simply Bitcoin. Share the show. If you guys want to support us, support our sponsors, check out our sponsors. Click those links. And we'll see you tomorrow for a brand new episode of Simply Bitcoin Live.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.